Hello and welcome to another episode of Monday Markets. As always, you're brought to you by Woo. Links available in the description below. Let's not spend too long here because I think the future side is slightly messy. We can talk about that later and focus more on the TA as we have monthly close, weekly close, and a bunch of fun stuff going on. So I still think BTC monthly is mostly noisy. Aside from closing below 59k, I think that would be rough. And then if you get a dip into monthly support as a result, that's great. Otherwise, I'm still reluctant to put too much weight on any single given monthly close because technically all of these signals were just as valid as each other, yet it's been 6 months of chop. So you won't be getting particularly clear breakout signals from the monthly, I think. Breakdown signal would be clearer, but looks less probable with this type of monthly close. So this just isn't the appropriate time frame for this context. The context is the market's leaning on support. The signal would therefore be losing that support or reaching other levels post breakdown. I don't think this time frame is appropriate for timing the breakout, so to speak. The weekly time frame is very interesting. As always, Twitter's discussing market structure and people have different views on this type of thing. Is this a higher low and then this is the higher high? Or is this the high that has to be violated in order to break market structure? Do you use the line chart? If so, did this leg here count as a higher low but we then violated it? You need to break the high that made the low. Well, this is the high that made the low. So is this a break in market structure? I just think the discussion is very noisy. I've also seen just flip-flopping on timeframes saying, well, this might be a weekly market structure break, but on the daily, this is not the high that led to the low because this low was higher than this one on a wick basis. So again, disagreement as to bodies versus wicks. And so I just don't think the market structure discussion is particularly fruitful unless you've got your own system that you apply consistently. So I really think this is not a matter of right or wrong. It's more a matter of how do you interpret these signals and do you do so consistently. If you have a consistent approach and methodology, you're more likely to be able to find some signal from the noise. If you're always jumping around between wicks, candle bodies, time frames, specific highs and lows, then I think that just gets too noisy to be useful. For our purposes, it almost doesn't matter whether this is a market structure break or not. Purely from a line chart perspective, I think it's a valid one, at least a local kind of higher high, an aggressive one. The problem with being too conservative with market structure breaks is that you can always find a reason that a previous high is more important. And by the time that high is broken, you start having the idea around here for potential higher lower market structure break. And then you end up, that idea becomes actionable 10, 20, 30% later, and it's just not very useful. It's completely sort of detached from the market. So at least for my purposes, this is a valid market structure break on the weekly, and now it's a question of sort of what happens from there. As discussed on Casual Friday, the two sort of processes that tend to happen when there's any type of breakout, you can even ignore the term market structure break, but when there's a breakout, is that you get aggressive continuation or dip and continue. So in market structure terms, that would be higher high continuation or higher high, higher low continuation. So what would that look like if we map it out? So on the weekly time frame, I think and this is the reason I was kind of reluctant to get into the whole market structure debate, is that you can get a lot of value from the weekly time frame without having a strong view on market structure if you find it too noisy. So for example, you'll recall for some time we talked about this weekly cluster from 63 to 64. You can take a more Don-like generous view of this cluster between 61 and 64, and that would be the area that would have to hold for continuation. I think we can do slightly better than that, specifically on intraday timeframes, but for our weekly purposes, I think if scenario 1 or outcome 1 is true, which is to say a market structure break into continuation, you'd want to see a weekly close above 64.2. The reason for that is if this weekly closes, let's say bearishly, closes red and pushes back below 64 and closes at 63, 62, whatever it may be, then at that point, just from a kind of a local price action perspective, it looks more like a failed breakout of sorts. There was a chance to turn this area from resistance into support, close above, close below, and you can at least expect a pullback. That would be the directional bias for the weeks to come. So I think if you're positioned for aggressive continuation, a prerequisite for that would be for this weekly candle to be rescued and close above 64, and then you can sort of work your way back through these lower highs for continuation and as gradual targets. I really think most of the interesting trading stuff will happen on the 4-hour and hourly time frame. But just to set some context, I think this is a fine weekly close. It's technically a break in structure, and we have a strong move down on a Monday. So as we'll discuss, there's always a chance that this ends up setting the weekly low early on in the week if the market is strong, and then there's a weekly open trade to be had there that results in a stronger weekly close. But without getting ahead of ourselves, really the only weekly level that I'm interested in is either this high weekly close in isolation, which is say 64, or if you want to take a slightly more charitable view, it would be 63 to 64. If I go all the way down to this cluster here at 61, I think other timeframes have that area covered better than the weekly, which is why I'm happy, at least for weekly timeframe purposes, to limit myself to 63, 64 on a closing basis. So the daily is where it starts to get interesting. So we had a breakout and pullback that's happened today on Monday. And I think this might be easier if I just overlay the personal chart I'm using for this. This is essentially what it looks like. And there are only like 2 or 3 areas that I think are very significant. And I'll try to save you time watching this video by going over those instead of giving you a historical walkthrough through every single fucking candle at every single level. So with that in mind, what are we left with? So there are essentially 3 areas here. 4 if you're being generous. The first is the weekly open, right? That's at 65.8. 65.5. The reason the weekly open is significant is for 2 reasons. First of all, we know that we're roughly in an area of weekly support. So if we have a week that's going to be strong, and or if this is some sort of trap, eventually if the weekly is going to close green, then by definition, it has to close above the weekly open. So you can imagine, for example, if the market just does a bunch of this kind of stuff and then starts trading above the weekly open, what the weekly candle will look like is that it's essentially setting the wick early in the week, Monday, Tuesday, Wednesday, whatever, and then gradually starts to trade above the weekly open and ends up closing green, right? So you essentially have this as the candle level, and if it's trading below the weekly open, the candle's kind of looking like this, and then if it starts trading above the weekly open, there's potential for the candle to start looking like this. And it's that inflection point as it transitions from below the weekly open looking bearish to above the weekly open starting to look bullish. It's really that inflection point for reversal or kind of weekly open setups. That's what we're trying to catch, that move from move below the weekly open if it's bullish, opportunity to buy, move above the weekly open if it's bearish as an opportunity to sell, and you're targeting the other side of the weekly open, right? So in weekly candle terms, if this is our weekly open, the business that you're doing here below the weekly open is that you're trying to catch the weekly wick, and then essentially do business around the open or compound around the open and catch the body phase of the candle, right? So you're looking to position here, weekly open gives you your trigger or confirmation or compound or whatever, and then it's really the body portion that you're looking to catch. If the directional bias is bullish, obviously it works the other way around as well. You have a bearish directional bias, this is your weekly open. With that bias present, all this price action above the weekly open is technically setting the wick, and then once it trades through the open, you're hoping to position for the kind of expansion phase of that candle as it moves from the weekly open to set a lower close and lower lows. It's really kind of this meat of the move that you're trying to capture, and anything above the weekly open ends up being your wick or deviation. So it's nothing complicated. You're just viewing the higher time frame candle as it is forming through a lower time frame lens and using the candle open to keep you informed as the shape of the candle essentially takes place. I know it sounds completely nonsensical, but I've got a video on my channel about this called... what is it called? I don't know. There's a video somewhere, I'm sure, so go find it. So levels aside, purely from a weekly open basis, if this weekly is going to turn bullish and this Monday dump is something, well, essentially a scam that's going to get mean reverted, the most simple trigger in that case would essentially be the market accepting back above the weekly open, which means that if you're being sort of conservative with the setup, you're agnostic as to what happens below the weekly open. You know, all of this is unimportant to you. And then as soon as it starts trading above the weekly open, then the probabilities shift, or at least you're considering the possibility that the weekly low is in. So anything that took place below the weekly open, as we discussed, is the wick portion of the weekly candle. And then once the weekly open gets flipped, you're looking to catch the body portion of the candle for the expansion, right? So very straightforward, just one level to keep abreast of for this week, and obviously it won't be valid next week because there'll be a new weekly open, but just for this week, you know, if this ends up being a scam, whatever form it takes, maybe it just goes up, maybe it goes deeper, then it goes up, maybe it never gets there at all, but the weekly open is important because if the week is going to be strong, and if we're going to have a green week, then by definition it has to trade above the weekly open. So if we're in for an expansion week with an early Monday trap, then you would look to do business on the weekly open flip on lower timeframes, finding yourself some sort of invalidation as close as you can to the level, and hoping that the trend portion of the candle carries you through to the rest. That's one thing to bear in mind. And I don't think the weekly open has to be considered in isolation. So that's just kind of the simple version, that you have some sort of weekly bias or high time frame bias, and if you're looking to position for it within the trading week, then the week, that trading week specifically with that weekly open in force, you do it through or above the weekly open if it's a bullish bias, or below the weekly open if it's a bearish bias, right? So that's kind of isolated, but there are also cases in which you don't consider the weekly open in isolation and use it as part of a larger trade idea. So suppose that your high time frame bias is very bullish and you are convinced that anything that takes place below the weekly open, so all of this, is a scam. So as a result, what you would look to do is the weekly open is essentially your guide, not for profit taking or anything like that, but for compounding and when to expect the next trending portion of the move to take place. So one example of a setup that can arise from that is that if you get, for example, a dip into your higher time frame level or even intraday level, let's just say this is some mega important support level that has every single fucking confluence in the world, you end up buying that, or you open a starter position there, and then as the market moves up and, you know, gets accepted above the weekly open, you would move up your invalidation and use that as a trailing stop to look to capture the expansion portion, or it can be used for compounding, which is to say you open a starter position below the weekly open, you're getting a better entry for less confirmation, and then once the weekly open is flipped, you add to your position, or pyramid, or ladder in, or compound, or whatever you want to do, and at that point, you get a arguably worse entry, but for more confirmation. But you can see the overarching idea is the same. The overarching idea is that the weekly open, anything below the weekly open is a scam. Question is, how do you take action? The conservative approach is just to view the weekly open in isolation, and if it flips, just punt it and hope you're right, and there's a good remainder of the week to be had. The sort of more aggressive version, or the sort of compound oriented setup, is to take that bias very seriously and look to buy support below the weekly open and compound when it goes above. And the same works for the bearish side, right? If you have a weekly open that you believe is bearish, or a trading week that you believe is bearish based on the weekly close, you have a bunch of trading taking place above the weekly open, you would look to open a position or start a position above it, and then once it breaks down, starts to confirm your idea, you sort of compound that or use it to trail your stop, okay? Again, there's a video on my channel, the Cred channel, on top-down trading or higher time frame, multi-time frame, whatever bullshit. Just go watch it. It's much better than the haphazard explanation I've put together here. So going back to the actual BTC levels and the charts, yes, I think you could just trade the weekly open on intraday basis and hope there's enough juice left for the rest of the week to reverse this early Monday dump. If you're viewing it more from a level point of view, I really think there are two areas that matter. The first is 64.1, 64.2. If you look at that on the daily, that's just the highest close. If you extend this highest close, you can also see that it lines up with previous levels of support and resistance, right? So it's not just the 64.1 level on the daily, sort of this high, but it goes back to this shelf here, and you can sort of draw all the way back if you want. It's a decent level. What have we had in the interim? We had a close above, didn't really go anywhere, and close back below. So in the very short term, this is a failed breakout on the daily, and you could also see that on the 4 hour, right? If we were to remove all of our levels and just view this consolidation from which we broke out, some version of this would be the bottom of the range, some version of this would be the top of the range, and for the time being, we broke out from the range, weren't accepted, and traded back within it. So ordinarily speaking, your causes, or the way you would sort of establish a bullish bias following a failed breakout, would be to either invalidate the breakout, which is to say trade back above 64.1, 64.2, 64.3, whatever, however you want to splice this level up. As you know, one of my better setups is to fade double deviations. So if you have a very clear level, deviates it once, gets back in the range, and then it accepts above a second time. The second time is much less likely to be a fake out, much more likely to be legitimate. So I think that makes 64.1, 64.3 a compelling pivot to give that trade idea a potential shot. And again, there's always that weekly open if you're reluctant to do business so close to the level. Alternatively, in these cases where you have a range breakout back inside the range, your second option to be bullish is not a breakout invalidation / second fake out setup, but rather a move to the other extremity. In this case, the other extremity is closer to 62K, which begs the question, or at least raises the question. I think question begging is a logical fallacy. Nonetheless, it raises the question, or poses the question, what do we have at the bottom of the range that could potentially be compelling? And I think there are two things that are at least useful for short to medium term trading. One is just, I've labeled it wick, but it's just a bunch of built up lows, at least on the Binance Perps feed, that are here. You know, if there are any longs that were chasing this on the way up, or buying the dip early from a market structure perspective, within this consolidation, then there's a decent chance that their invalidation is going to be clustered around this area of lows, previous support level or whatever. And so if the market chooses to trade through that and spike and liquidate those traders, and you see signs of absorption, or just in general, just like a SFB style failed breakdown there, it's at least, I think, within the context of this consolidation, the first reasonable area of interest, because by definition, it is an extremity, right? 64.1, 64.2 is an extremity, top of the range. This is the extremity on the other side. When it comes to sweeps, spikes, wicks, whatever those types of SFP-esque liquidity raid wannabe setups, I think a useful qualifier for those ideas is the raid or spike, sweep, again, whatever adjective noun you want to use, is it taking place at a contextually interesting area? If it's just a random wick in the middle of nowhere, then the probability of the setup working out is much lower than if the setup takes place in a sort of confluent area, or if there are other reasons to believe that the spike is going to be enough for the market to hold and reverse. I think in this instance, there's a decent level somewhat close by at 61.6, 61.7. I've labeled that daily /H4. Why does it bear that title? I think hopefully for self-evident reasons. 61.6 is itself a former daily range high and also very clear support resistance level on the 4-hour. You had former lows, a big cluster of highs here. Last little low pre-break. Completely nuked through it, and the market suffered as a result. And then you had, it's not uncommon, as you'll know, for those of you who trade double close setups, for the market to, this is a sloppy version, but to essentially crater through support on one side, crater through on the other side, and then you get like a real quote unquote test later on. So all of that to say that there is a nice little confluent area at around 60, well, let's call it 62, because it's somewhat in between the daily and 4-hour level and the wick itself. So what does all of that mean from a trading plan, trading context point of view? Hopefully this kind of demystifies the price action at the current juncture. I really think there are 2-3 areas. One is like the bottom of the range, one is the top of the range, the other is the weekly open. And we've discussed ways to potentially do business there. I'm not super interested in the short side at the moment. I'd rather give this thing a chance to buy, essentially, to see if the weekly market structure break is going to have any weight, and if it fails, so be it. So what forms might that take? The really aggressive version, again, as mentioned, would be 64k plus failed breakout failure. I know that sounds absurd. That's literally what it is, right? This is a failed breakout, and if that fails to lead lower prices, then it's failed breakout failure. I meme about that stuff all the time, but I prefer being straightforward, if not somewhat repetitive, in the terminology rather than making up all of my own. So 64.1, 64.3, whatever intraday or daily trigger or close is appropriate there. That's kind of the earliest indication that this thing might not be a total piece of shit, right? And then I guess from a really low time frame trading perspective, your target or your first trouble area would be the weekly open. If your bullish bias is very strong, then you would expect the weekly open to ultimately flip from resistance or never providing resistance to support, and then you get your trending leg afterwards. But all of that has to come off the back of 64.1 to 64.3, this former range high, not turning into a whole failed breakout, trade the other side, the bottom of the range, all of that shit still needs the range high essentially to get reclaimed. So I think that's kind of the earliest point for bullishness, at least in terms of where the market is trading now, is trading or being accepted back above the range high with eyes on the weekly open is either a trouble area if you're conservative or an opportunity to compound if you're aggressive on the long side. Alternatively, if this turns into a sort of textbook range failed breakout, which is to say range high, range low, one side gets smoked, back inside the range, trade the other side, like all the basically textbook auction market theory type of stuff, then I think the only reasonable area to stand in front of that is, as mentioned, around 62k, because there are a bunch of lows there, and the lows just aren't just built up anywhere. There's at least you've got the high time frame on your side. So it's not like a sweep, spike, whatever setup in isolation. You would at least have a high time frame close there to provide you with extra cushion or some sort of directional bias. Yeah, that's BTC. Hopefully that's helpful. That's at least what I'm thinking of for the time being. I haven't looked at ETH much. It's odd to see BTC weakness. I haven't done enough thinking to see what that might mean. On the ETH side, I didn't really like the weekly time frame that much. I essentially agree with Don that this is arguably a first trouble area in the form of this 26-2700 cluster. I think the last time we spoke about ETH was on the first bounce at this cluster. I think we were trading around these highs, and the argument was there are a bunch of lows on the other side of the range, and this would be the support, and that's kind of where the market held for a bit, and that's been the pivot. But that was ages ago, so not particularly relevant for our purposes at the moment. Yeah, so on the weekly, I still think the obvious level, if you want strength, is 3k plus. And while that may seem far away, I don't think, given ETH BTC weakness, that it's particularly unreasonable to say I really want ETH to be strong if it's going to bait me into buying ETH over BTC. You can set like a standard burden of proof or threshold for an asset for you to buy it over something else, especially if it's been weak and you're kind of trading counter trend, as you would be with longing ETH over BTC, because the ETH BTC chart looks like shit. As far as the daily time frame goes, I don't love any of this, to be completely honest with you. I think the BTC consolidation and ranges are clearer. If there were a gun to my head, which would be unjustified given we're talking about candlestick charts here, but sometimes you can get decent levels by looking at the first low-ish made after an impulsive leg, which for ETH would be 2,500. It would essentially end up looking similar to BTC in that, you know, you've got a failed breakout and there are wicks on the other side of the range. If you get it, great. If you don't, too bad. There just isn't, unlike BTC, there isn't a particularly, you know, symmetrical or equivalent level where you could say, oh, this is also really good, and that would be an early trigger for strength. I still think 3K is better, but it's quite far away. For day trading purposes, if you really wanted to, I suppose you could just transplant the weekly open section from the early part of this video onto ETH, and that would land you roughly at 26.57. Well, I say roughly, it's almost exactly 26.57.90 is the weekly open, at least on Coinbase spot. You could essentially apply the logic from the BTC section here, but I'm just not super interested given ETH BTC hasn't been particularly friendly, and staying away from this thing on the long side has been good. You know, if I'm going to position for strength, I'd rather pick BTC or Solana or some sort of shitcoin rather than ETH. We can take a look at Solana. Don't expect much has changed, and it has not. God, yeah, I mean, look, I don't want to be too granular about this because essentially this thing has gone sideways since March, April, however you want to splice it, and it's been essentially been a tale of an impregnable, is that a word? Impregnable, impenetrable, whatever. English is my second language, forgive me. There's big support at 125, and every time I've talked shit about it, it gets mega defended, and I miss out on making 10 times generational wealth, which in my case would be £100. But nonetheless, yeah, this is just a really, really big range, and I don't think there's a lot of value in looking at it otherwise. If you step in at the extremities and said, oh, Cred's about to be bearish at 125 because it's been tested, I'm going to buy it, that's been a fantastic trade. Anything else has been a bit more boring, and most of the focus on meme coins and Solana Beta anyway. I don't want to make this video too long given how much I rambled about weekly open. Maybe I'll post some charts or do something else this week content-wise, because I know we need to catch up. Maybe Altcoin Thursday. My only concern with Altcoin Thursday is A, I always overpromise and underdeliver or never deliver, and B, I'm pretty sure if I do an Altcoin Thursday, everything will go down 50%. But let me know, and we can find a way to talk about some of these charts. And there's a fair bit of dispersion here as well, as you can see. I mean, Sheep's down 7, and Tau is up 5, and Doge is up 4. Sorry, WIF is up 4. Doge is down 4, so a bit of a messy Monday. You know, the old meme of Monday you don't trade because it's the Monday range, Tuesday you don't trade because you're waiting for Monday range to unfold, Wednesday you don't trade because, you know, it's the midweek range or something, midweek candle. Yeah, there's all sorts of fun stuff like that. But yeah, I'm going to shut up now because I've spoken enough. Thank you to Woo for giving us money. I don't know why they do it, but they have launched social trading, which is actually quite cool. I'll probably have a post up on Twitter about it in the near future. At the moment, it's on mobile, and I mean, it's doing well. It's just quite KOL focused. Like, there's a guy, you can copy trade him or counter trade him. I think it gets a lot more interesting if it becomes more of a strategy marketplace. So imagine instead of being, oh, I'm gonna copy or counter trade this guy off Twitter, instead there are strategies like meme coin long or trend following or momentum or buying the top gainers, and then you could express your view on the market by either copying those strategies or counter trading them. So let's say you think the market is going to trend, you just copy trade a low time frame trending strategy. Let's say you think the market's going to chop, you can counter trade that trending strategy. Or if you want like exposure to the shittiest shitcoins and you think everything's going to go up but you're too lazy, you copy trade the top gainers by 24 hours and let the strategy do the thinking for you. Alternatively, if you think everything's about to nuke and there's some sort of blow off top exit pump, you can just counter trade that top gainers, and, you know, if you're expecting mean reversion the next day. I just think it has a lot of potential to become quite interesting as a strategies marketplace, more so than copy trade, counter trade, a KOL type of thing. But at the moment, it's still very cool to check out. Again, I'll probably have a post about it later this week. Thank you if you've managed to somehow sit through this. And again, there's a more delicate, structured, pedagogically useful version of the whole weekly open, daily open shtick on my Cred channel, so be sure to check that out as well. If you're still watching this, thank you. If you watch this channel at all, thank you. In fact, hope you have a wonderful start to your week, and chat to you later. Bye-bye.